Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 14th of February, 2024. Did you remember that it's Valentine's Day? Did you prepare? Did you make preparations? This is episode number 2623. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, we're looking at a market that's taking a pretty decent bounce. This was expected. I discussed this with some people yesterday. Really looking for this thing to fill in some of the gap here. There isn't anything significant to talk about in terms of catalysts. We see the Treasuries just moving quite a bit. A lot of eyes on the Treasuries. PPI December revised came in at negative 0.2, previous negative 0.1. Core PPI and revised at negative 0.1%. Maersk reported. No, actually, Maersk just had some news. There isn't all that much for me to talk about this morning. Inflation came out in Great Britain at 4%, lower than the 4.2% expected. 4% is in line with the previous month. The core inflation came out at 5.1% versus 5.2% expected, so cooling off slightly. And then we got the GDP growth and employment number out of the Eurozone as a whole. What remains for today is we have Fed's Goolsbee right at the open at 9:30. We have Bank of England's Bailey at 10. We do have the EIA crude oil inventories today at 10:30, so keep an eye on that if you're a crude trader. And then we have Fed's bar at 4 this evening at 6:50 p.m. Eastern Standard Time. We have the Japanese GDP growth rate preliminary for Q4. We have Fed's Bostic at 7, and then Australia has its employment figures and unemployment rate at 7:30. The S&P multi-distribution profile this morning. What this it tells us is the market is in an active price discovery mode. It is out of balance or imbalanced. In today's session so far, the open is below us. The low is 68.75. Remember, yesterday's settlement is 71.25, so we're well above yesterday's settlement by about 20 points. And the high is 5,000, so we're attempting to push into that 5,000 area. 32 points of range, 223,000 contracts traded, and the inventory is 72% long, 72% long. Okay, so that's the lay of the land. Did I miss anything? Did I forget anything? I hope not. Let's take a look at how things are laying out. Here's how the lay of the land is. And by the way, apologies for yesterday's abrupt end to the Trader Bite. My wife doesn't usually call me when I'm doing the broadcast or at the open. She knows better. When she calls, it's generally an emergency, and it was nothing serious for her. She just witnessed an accident with injuries, and she was behind the car that got T-boned at an intersection. She was lucky enough to stop, and she witnessed the whole thing. She didn't want to leave the scene of an accident because there were injuries, and so I had to rush to go grab the kids and take them to school so they're not so late and they're not all sitting in the cold. So that's what it was. Again, apologies, things happen. So yesterday, non-farm payrolls, explosion to the downside. John, if you're here, remind me of what the SOC was. I don't remember. I usually memorize those things. There's just a lot going on. We have a big gap zone that we left behind. Yesterday did a good job of trying to recover early, and then it extended down, and then we ended up pushing all the way through to the other side by the end of the session. So yesterday, we had a pretty sideways kind of boxed in trade, pretty balanced in the ES for the most part for the session. And then we had this quick liquidity check up above, and then we pulled back again, try again at the IB high, and then it just let go and extended. It extended down. The ES had an interestingly different view on things than other products. It just took the ES so much more to actually start to sell off. So it's we ended up pushing into some key areas. We'll go over those on the TPO chart. The balance zone at 66 right here. Right in here, this is the MC point of control. The 55 was below that, and the 50, and we held here for a little bit. Little fight right there on regaining the 60, and that fight kind of fueled the buying into the close. So we ended up with a neutral normal day. Yeah, I had that backwards. We had a neutral normal day by the end of it. You would expect today that if a day like this, if it's neutral and it starts to sell off on the kind of selling off that we got, we would expect it to be a neutral extreme day. This is neutral normal, so automatically I'm suspecting, because of that, I'm suspecting that this is likely to drift up. This is likely to drift up. It looks like it found some buyers at the bottom. Thanks, John. So the SOC is 50.23.5 up above. So we get this, we found buyers and we're pushing higher, and the idea is it's likely to continue until it really finds some sellers. You'll know when sellers have been found. You'll have a quick impulse down, consolidation, and continuation type of move. Yesterday, there were some odd characteristics all around. You had the RTY, which sold off. The RTY was down like 4% yesterday, which is tremendous for such a broad index, but it contains a lot of banks, and those didn't do well. But look at the delta. Look at the delta on the RTY. The delta is positive the entire time it's selling off. The delta is positive. And so the RTY is now going and recovering a little bit. It's not recovering as well as the NASDAQ or the S&P, but it is recovering. NQ, pretty standard day, whereas the ES got tangled with its VWAP and the mid was a lot higher. The NQ actually pushed right through full session VWAP. We don't generally expect that. And got right into the full session mid. Full session mid. Pull back to the VWAP right here. Big selling. Pull back to the VWAP. Bounce back up, and what we have is a spike failed test spike retest fail setup, and then once it broke the low here, there were a couple of opportunities, really decent looking opportunities to get on the short. Not up here, but down here in this range down here. So anyway, that's Monday morning quarterbacking, I guess. But overall, what is the condition? The condition is out of balance in the moment. The market's out of balance. We are trading on top of the overnight point of control so far. You have the overnight point of control on the NASDAQ right there. In the ES, basically, same story. We have some separation between the VWAP and mid. And as I said, the inventory is about 72% long. and it's opening right on top of its overnight point of control. Okay, so it didn't spend very much time on the reopen at these lower prices. It immediately pulled higher and continued to push higher. So we have a market that's tested the 5,000 in the S&P and is resting. Very quick test. It's a spike type test into the 5,000. And so if it does not sell off immediately and try to retest this 84, 85 area, then that 5,000 is likely to go. And the big target is, I'm going to try to have you guess, but there's too much of a delay here to wait for you to answer. The big target is 50.2350, which is what? Which is the SOC. Okay, so that's, on a take of 5,000, this becomes the main area the market's expected to go to. So if we look at the overview, you'll see that, these guys here in the Treasuries didn't take that news too well. The 10-year just exploding to the downside and hanging out to the downside, and doesn't seem to be showing any recovery whatsoever. While the equities are recovering back, spike down, and are, the S&P is about midway back. The Nasdaq's a little bit lower on that. The Nasdaq's a little bit lower on that news. The Treasuries are not coming off their bottom, right where the spike low is. Treasuries are trading right near the spike low of CPI, which means that there's quite a bit of upward pressure on yields. And so these equities are likely to have a hard time, even though they seem to be pushing higher. They're very likely to have a hard time kind of sustaining those prices. We need to see yields come off a little bit, which means we need to see the futures climb a little bit for it to be easier to clear the way for the equities to climb. Natty gas, holy crap! Since the Russia-Ukraine war, natural gas ran up to a high in early 2022 of $11.50, if I recall. $11.50. It's currently trading at $1.64. $1.64. That's incredible. The value of natural gas has come down 90% or something. It's quite a bit. This thing is just unable to find a bottom. Yesterday, it looked like it was consolidating. See this? Comes down, and then it looks like it's consolidating a little bit, finding a base. But this morning, it's giving that base up. So we ended up settling at $1.69 yesterday. I'm knocking off the last digit because they trade in tenths of cents in natural gas. I'm knocking off that last price, that last digit. This morning it fell to $1.64. So that's really interesting. Crude continues to hold on to its prices, and overall, that's what the picture is. What is the plan for today? Because I need to hop off here. The plan for today is we're opening out of balance. So that is a big piece. We're opening out of balance. The question is it an open auction out of balance that retests, finds a base, and then crosses, and then continues to move away from the gap in yesterday's auction? We do have a little bit of an excess at the low. So that's a relatively firm-ish low. Not pretty, but firm-ish. And does this thing run right back to its SOC, which is at 23.50. That's the primary idea, is if it holds a retest of yesterday's range, it's very, very likely to drift up. It's got a little bit of balance to deal with right here. A little bit of resistance in the 50.16, 50.20 area, or 50.11, I think, is the, 50.11, 50.20 area. But other than that, it's very likely to push its way through to 23.50. If we're opening out of balance and we end up attempting to push higher, pushed into the 5,000s here, if it reattempts to push and it takes out the overnight high and then starts to impulse down and get back in the range, I'm looking to get short back for what's called a gap to settle trade, back into 49.71, back into the point of control for yesterday and settlement for yesterday. Okay, so that's scenario 2 in the ES. I'll leave you there. I've got to go attend something, and we have our accelerator program cohort standing by for live trading today, so I need to go prepare for that. Good luck, and mind your risk as always. Make sure you're able to be here tomorrow. Don't blow it all today. Good luck.